Good morning. It is Thursday, April 11th, and just a quick couple of comments. Opening bell just rang, and the S&P is going to continue its march higher. The big news really in the market is Microsoft. You know, it was downgraded by a few firms, and the basic deal is, PC sales declining. There's just not as much demand for the buggy whip as there used to be. And so after the stock really ramped almost 6% in just a few days, it's been giving some of that back. So that's going to hurt the NASDAQ today, but how much is really kind of an open question. It's down a little bit pre-market, and but I think ultimately the squeeze is going to continue. Also, take note that job growth is bad. You know, that's what we were talking about the other day. With the number of people out of the market, but the unemployment claims came in for last week, and they're actually not so bad. So this kind of puts us in the sweet spot because job growth is bad enough to keep the Fed in the game. You know, they're going to keep the printing presses on, while the unemployment claims are not bad enough to make investors feel like, oh my gosh, we're going to have a big economic downturn. I got to stay away from equities. So I think this whole squeeze is going to continue. And what I would suggest you do is if you're already long, then seriously enjoy the ride. Some stocks that are like super extended that you have, if you're getting kind of nervous about it, don't sell them. Maybe just take a partial, sell part of it just to kind of feel like you're ringing the cash register. But if you're not really nervous, that also means that you've probably got a little bit a little bit longer time horizon, which is a good thing because this is a rally that's not just a short-term, technically based rally. It's actually something, again, where there's no real alternatives, and you just have to understand that. But think about it this way too. If there's no, other alternatives to place your money, then I'm serious. I'm just kind of stating the obvious. If there's no other alternatives to place your money, then where else are you going to put your money? Nowhere. And do you think this is going to change? Is this going to change next week? Is all of a sudden, is the bond market all of a sudden going to get really, really attractive? No, I don't think so. We'll see that happening a little bit over time, but we don't really know whether that's going to start in 6 months or 6 years or 60 years. So just stay the course, let your positions work for you, trade in and out if you must, but I really think the deal is you buy strong stocks, stocks that are working, and just hold those for the foreseeable future. So anyway, that's really about all I have to say today. I hope you have a good one, and I'll see you in the forum.